Welcome everyone to our laundry room this morning. Our host today is David Oliva. David, it's all yours.
All right, everyone. Thanks for joining us. Today, we're going to talk about, we're going to talk about whatever you guys want to talk about. My opening topic to start a discussion would be financial analysis, a basic financial analysis and reviewing KPIs. But first I want to say ASTI's coming up soon, and if you haven't registered, you should register, or David Costanzo will find you and force you to register. Right there? Yeah. Okay. So ASTI.us to register, so do that now. So the laundry room setup is really meant to be sort of an open discussion, about whatever anybody wants to talk about. But I thought it would be interesting to start off with just some basics of analyzing your finances and your profit and loss statement, looking at the numbers in your business to decide, to make decisions about things that you want to do or change. So I'll start. A couple of the things that I go over are the profit and loss statement, which I review on a regular basis to get it from the accountant and go over it and look at a couple of things. Couple of key things, obviously revenue, how much money did we bring in? The second section would be cost of goods sold, right? So how much did we pay for parts or supplies, and how much did we pay for technician labor? And that'll give you your gross profit amount. And from there, you can determine your gross profit margin, right? So, maybe it's 50%, 60%, 55, 43. It's going to vary. I'd say there's probably some industry standards somewhere between 50 and 60%, most likely. You look over your regular expenses in the next section, so you can see how much you're spending and compare it, from period to period, year to year. And then your net profit obviously is pretty important. So how often does anybody here want to speak to how often they review their financial statements, if they even get financial statements from their accountants on a regular basis? Who does that regularly? What do you look at? What kind of data on your profit and loss statement do you find to be the most useful? Somebody has to answer. I'm going to pick on somebody who's on camera. So shut your camera off if you don't want me to pick on you.
All right. So
All right.
we get I get financial statements from my accountant every bookkeeper actually every monthly, and then in between that I get our KPIs from service desk. That's kind of how I have a pulse on the business.
So we look at the KPIs. David, what kind of KPIs do you track? So the things I look at, just to give people some ideas, on a regular basis, I break it out to like technician KPIs and then business KPIs, and then there's customer service as well. But for the techs, I'm gonna get calls completed, first call complete rate, beyond first call complete rate, how many jobs did it take more than 2 trips to complete? NPS score, so survey results from customers, and their average ticket and conversion rate or walk rate, depending on how you look at it. What do you look at for a tech, David?
Honestly, most of the things you mentioned, in addition to revenue, net revenue, net profit per technician, and then a lot of your job.
Go
ahead.
Net profit, that's something I'm interested in because I've been trying to figure out really how to track profit per technician, which is very, very difficult. And actually, a couple of us were discussing this recently. Do you have a specific way to track that? Because there's so many variables that it's really hard to put a number on any specific technician.
So I'll take it back. It's not really net profit, but I look at the profit of the revenue minus parts, and that's I look at that as
okay. So gross, right? Okay. Oh yeah, that makes sense, right? Okay, that's a little bit easier to look
very
at.
tough to. You could divide some of your metrics, by the amount of techs you have, but that's never going to be an equal amount. So
yeah, you can do that, and I've tried that multiple times in many different ways, and I get all of these different numbers, and they never add up to the same thing, and they never add up to the actual net. So I don't really know what we're looking at. That's probably the most difficult thing to look at. There's a couple of different philosophies on that and how to keep track of that, but business-wise, some of the things we look at are obviously first call complete rate, all of those same numbers for the entire business, right? Revenue, average revenue, daily revenue, conversion rate, turn time, parts per job. And we also, when I got some advice from somebody who's on here now, which was really interesting, which I guess is probably fairly common, but I'd never done it, to have a revenue target, right? So if you know your revenue target, like this is where I want to be, and then I know my average revenue per job, we can say, we need to do approximately this many more jobs this year to hit that revenue target, which is a useful metric when figuring out, planning for, for growth. Some of the other things that I look at are using gross profit. So my software allows me to break down, gross profit or gross margin by, either by brand, by type of appliance or whatever. And we've used that recently to go over some of the products we don't want to service anymore, the things that are least profitable. That's been helpful in freeing up some time on the schedule for profitable jobs, things we actually make money on. So I'm interested in hearing what other kind of metrics or financial data people are looking at on a regular basis within their own business. I know me and David aren't the only ones that look at numbers, right? We're all running businesses here. So people probably have some other sort of information about what to look at. I'm going to call on Luke Luke Marumba, because he has his camera on. And just curious, Luke, what kind of numbers do you look at in your business? Right, you're muted, Luke.
Can you hear me now?
Yep, there you are.
Okay. So that's a really good question. It's something that I think nobody ever masters. You always get better and better at it. It's something you'll never ever figure out unless you dig into it more and more and more, because then you'll understand it more and more. Because there's a lot to learn and there's a lot of different ways of doing this. It seems to me that there's no one real answer, but what I use is I use a couple different methods. So QuickBooks tracks all of the income coming in and out of our business bank account, and it can give you general numbers like your expenses versus your income to see how you're doing there, and then you can track that over month to month, year to year, to kind of see in a big perspective what's going on. But it sounds like what most of us here are trying to figure out is how to break it down so that you can see in detail how much is going to gas, how much is going to insurance, how much is, and not just on a business level, but like on per technician. And I'm not going to sit here and say that I have it all figured out, because I definitely don't. I'm definitely on the beginner side of things and trying to get more information. But the software that we use is Workies. Maybe some of you have heard of Workies. It's getting more and more popular. That's actually pretty good at giving us pretty good breakdowns too, because it separates your taxes and every time you finish a job, it knows how much you paid for each part and what you sold that part for, and how much you made on the entire job as a whole. So I don't have any examples to put on the screen for you right now. Actually, maybe I could. Is that something you want me to do right now or no?
I'm not sure if Sarah would have to answer that about how to share your screen. I don't have that.
Maybe that's not a good idea right now since I'm not prepared.
Yeah, but yeah, you could just go over, what it is that you're.
Yeah.
So you're talking about like a profit and loss statement that QuickBooks will give you that, right? And it'll break down your expenses by by category.
Yeah. So yeah, that's yeah, right. So QuickBooks has the profit and loss statement reports that you can generate for any time period you want. If you want it to be for a certain month, for a week, for any date range, you can create that. And as long as you have all of your transactions itemized in QuickBooks, such as insurance, food, gas, rent, parts, and materials, as long as all that's covered, then it can break everything down by percentages. So it'll say like, okay, 60% of your expenses went to payroll, and then,
Right.
6% went to fuel, and then this percent went to that. So that's something I've played with for a few years. That is the best thing that I've come up with this far. And but again, it's always a work in progress, and something that I think any legitimate, like, real company needs to figure it out and work on it, because for the longest time I ignored that, because it was like, ooh, numbers, scary. I think I'm just gonna ignore that for a while and focus on this. But a lot of times I think
Well,
what I'm learning is that the things that you're afraid of digging into are the things you should be digging into the most.
Well, when you really start paying attention to those numbers and start to understand what they mean, and I'm far from an expert, I would never claim to be, but you learn a lot of things, and some things are kind of eye-opening. Like, wow, I didn't realize I was wasting that much money on this category, or spending that much money, or I spent this much more, last year. So it's good for those comparisons for sure. I think from a general overview, the three big ones would be revenue, cost of goods sold, and expenses, and then you can sort of break those out. Has anybody looked at percentage of technician labor as a percentage of revenue? I know ours is hovering right around 25%, which I believe is fairly standard. I know some other related industries might have a slightly higher percentage of labor. Has anybody looked at that? Does anybody have any comparisons for saying what you're paying for technician labor as a percentage of revenue?
What is the actual metric?
So your cost of labor versus revenue, what percentage is your cost of labor? So if you made $1 million in revenue and you paid $250,000 in labor, that's 25%. Have you looked at that at all? Because ours hovers around 25% year over year, which I think is fairly good in comparison. It's hard to know because you don't really have a lot of comparisons within our industry. I know so from like HVAC might have a higher cost of labor, but it's an interesting note, something to look at.
We do that as well, David. And in the peer group I'm in, we compare that with each other to see where we're at on a percentage that we're paying for labor, and even dwell down into how much we're paying for parts versus the other companies, because parts prices have gone up, and I didn't realize it was that bad this year until the last meeting, and it bit me. I had to start shopping around a little bit better.
Yeah, and that's a good point, right? Just knowing that, sometimes you're not paying attention day to day until you look at it from a larger perspective. Like, oh man, that really is costing me a lot more than I thought. My accountant told me once a long time ago, when you're looking at your gross profit number, it should always be approximately the same percentage year to year, right? So if your gross profit is 55%, it should remain 55%, give or take, every year, because that means you're keeping up with increasing costs, right? You're increasing your rates to compensate for higher labor, higher cost of parts, and so it should always remain around the same percent, regardless of increased costs. But you don't catch it unless you look at it, right?
If you're not charging enough, it'll bite you. Yeah.
Right, but you'll see that gross profit number go down and down and down if your rates don't keep up with your costs or for labor and parts. Does anybody look at, like we were talking about earlier, profit by brand or by appliance type in order to make a decision of things to continue to service or discontinue service on? We did that recently and cut out a couple of different products that just are not profitable for us for whatever reason.
We've done that as well. During the pandemic was a big time to do it. It took a few weeks to do all the analysts, but we stopped servicing brands, even COD, because they weren't a good fit. You couldn't get the parts, maybe, or what. We were wasting a lot of time and money, and we were behind already. So we gave up a lot of that because of that. But we didn't just say, this one's the one that we need to get rid of. We had to look and make sure we were correct in what we were feeling.
Right. And how did you get that? How did you get that data? Is that from your software, or you just from looking
Yeah,
at your work
we
orders, or
use,
what did
we
you do?
use Service Desk, and my manager's a whiz with Excel and extracting all the stuff, and yeah, we were able to analyze it all. That Looker Studio makes it easier now.
Yeah. Are you using that? Yeah.
Yeah,
I
we're
was going to
using
talk
that,
about
and
dashboards
it's
later on.
wonderful.
Okay.
It's wonderful. Yeah, he finds it a
Right.
lot easier to do all this because he just extracts the one it wants, and it's all in our templates. So we can see it, monthly.
Right. It makes it easier to look at it from a visual perspective, from charts, stuff like that. One of the things that I looked at when I was looking at gross profit, so like I said, we're averaging around 55. So some brands and some appliance types have a higher gross profit, right? So we're getting more labor out of it versus parts. So our gross profit was maybe like 70, 80% versus 55 as an average. Some of them were 100%, and those were actually the ones we cut out within reason. And the reason for that was they were only trip charges. Nobody was ever proceeding with repair, so it was 100% gross profit because there was no parts involved in it. So that was kind of counterintuitive if you just look at the numbers, but knowing what they means a lot. Let's see what else we got here. So Manny, on the dashboard, what on the Looker Studio, you're using that as like a dashboard, right, to see all your metrics on a regular basis, or
Yes.
is that something you do just periodically? Yeah. Okay.
Yes, and then
what kind of?
What do we do? I look at revenue, and I look at each technician and how much revenue they're bringing in. There's a break-even point for having a technician, and we figured out what that was, and we want to know how much further they're going past their break-even, and we figured out what their potential could be, and if they're meeting their potential or not. And go over
How do you determine the break-even point? Because I don't know if you pay commission or hourly. I think it makes it a little bit
commission
trickier with commission.
But there is a minimum that we're going to pay them, and then your insurance, your fuel costs, workman's comp.
So you
time. So that's what it's got us to look at it.
So you're calculating their break even by their minimum that you're going to pay them, and
right.
then obviously their expenses. Okay.
Right.
Oh, that makes sense. Right, and then anything over that is an addition. Oh, that makes sense.
Basically, in our company, they need to bring in $600 labor a day minimum to pay for themselves. That's a minimum.
Okay. Well, that makes sense. And that includes all of their like fuel and health insurance or whatever it is.
Yeah, and taxes. You got to add taxes in there. You got to pay the employment taxes.
That's right. Yeah, that's a big one. Okay. So I have I don't know if you can't see the information, but the screen behind me, what I have there is it's a quick look. I can look and see how many jobs are completed for the day, what our target revenue is for our revenue goal for the year, and then how we've compared to that for today. And you can so I got revenue for the day versus what I would need to collect in revenue for the day to meet our annual target. And then we're looking at completed jobs, job average, and a percentage of jobs that they arrive to on time. So that's something I look at on a day-to-day basis, just for a quick glance to see how the day is going. Some days it's very depressing. Some days it's better than others. So,
David, that quick look that you're talking about, is that from Service Titan, or is that something else that you're compiling, or a dashboard that you're using?
Yeah, that's Service Titan. I set up a separate little, just an old computer I had with a monitor, so it just refreshes automatically. Service Titan has a lot of that. So Looker Studio is amazing. Service Titan has a lot of that same type of charting and reporting all built into it, and you can create a dashboard just like Looker Studio within the Service Titan software. Although I think Looker Studio allows you to do more because you can sort of really break it out however
and you can do what you want with it. That's the beauty. You can tailor it to what you want to see. We've dwelled it down to the geographical areas by zip code and how much money each zip code's bringing in, so we know which ones are ones we want to stay away from, and maybe not give them, maybe move out of that zip code kind of thing. That was an eye opener. Just so you know, yesterday, or maybe it was Monday, Wilmer Toro submitted his speaker information. He wants to do the Looker Studio class again. So
Oh, great.
yeah,
Yeah,
that'll be that he'll be at ASTI doing that again. So if you missed
I
it
think that's
last
great
year-
because
yeah.
I didn't see it last year. I wanted to, but making that information more accessible and putting it in a format like that, I think really helps to understand it, especially if you're not really experienced in looking at these numbers and understanding what they mean on a spreadsheet or something. Putting it into a chart format or, you know, a pie chart or whatever.
I like the pie charts
Definitely makes
myself the best. Yeah.
Yeah. No, that's good. Kate mentioned the turnaround time, right? So, you know, when was the job called in and when was it completed? That's a metric we measure. Not really. I don't measure that for technicians, right? Because it's not really up to them per se, but we do measure that for the business as a whole. And
Thank you for
sometimes
calling
you look at that
Appliance
and-
Service Center. This is Kate. How can I help you today?
sometimes you look at that turn time and it's can also be eye-opening because they go, wow, I thought we were a little bit quicker than that, but I guess not. It depends on parts orders. So I'd like to hear from some of the other 34 people on here about what they're measuring and what they're looking at on a regular basis. So somebody can volunteer or I will just call out somebody's name.
I'll jump in.
Todd? Yeah. All right.
We measure damn near everything because we can't figure out what we should be measuring. So we measure margin per call. We measure margin on COD jobs because obviously warranty has constraints over what the tech can and can't do. We measure walk rate, the percentage of warranty the tech's getting, their star rating, first time fix, recall rate, turnaround time, how many blue book quotes they run versus how many blue book opportunities they had, completes per day. We got pie charts like Manny likes for the breakdown of who their customers are, appliance types, brands. We have Sankey charts that show, you know, how many visits to fix. So you can look and see,
right.
You know, for the two that took 2 visits and the one that took 3 visits, you can dial in and see. We look at that. We got maps. We got an output of all their recall details so they can see what's hanging them up. All their reviews. We got maps of where they did all the calls that month. And probably like 2 or 3 other things are useful.
Sure. Well, that's kind of one of the downsides of having so much data available is like, how do you even filter through this? So I had to go through multiple times to sort of fine tune what I'm going to look at all the time. Now I look at all of that stuff also that you just mentioned, like occasionally, but what do you look at like day to day? Like what are the, you know, 4 or 5 things maybe you look at on a regular basis that are very important to you?
I mean, the monthly financials, obviously, you know, you mentioned like gross profit percentage, things like that. We track that month to month, obviously net profit, that labor to revenue ratio, we're a little higher than you. You know, we track that by tech, but it tends to be anywhere from 30 to 40%, you know, depending on the tech's efficiency. But yeah, I mean, you know, the main things we're looking at, what it comes down to is completes per day and their average margin per job.
Right. So we do quarterly reviews, and I just did them, and I keep some of those KPIs, and I show them, you know, quarter to quarter to the tech so they can look it over. And then we have targets. And what I found interesting, though, I have one tech who is not his conversion rate or his walk rate is very high. Alternatively, his conversion rate is kind of low, but his revenue target is very high, and his completed jobs are high. And it's kind of like, all right, do I really want to push him to sell more jobs if he's hitting his revenue target? Like, it's not like a rule per se, right? It's just something to look at. You do something similar when you're doing reviews with the technicians and stuff and show them their data.
We do monthly check-ins, you know, with the service manager where they see, we use Looker Studio as well. So we go through all that. We ask them about what they're having problems with, you know, try to offer coaching. We also have that dash publicly available within the company. So any of them that want to look at their own numbers or anyone else's, it's always accessible. And they do. They're very competitive.
we have a whiteboard which I need to update to a monitor, but I have a whiteboard where we keep weekly stats and, you know, how much they build out and how many jobs they completed, their reviews, their NPS score. Some of them are competitive. Some of them don't care, but some of them are competitive. So yeah, they like to see, you know, someone will walk in and he's like, I'm winning this month, because they get a little bonus too at the end of the month, whoever wins, you know, not a lot, like a gift card or something, but something to just keep it a little interesting, you know?
Yeah.
Yeah. So, okay. You use Service Desk too, Todd?
Yeah, we do. So it's a lot of exports. We update the majority of them just once a month, because we'll lock the sales journal so no new data will be added, and then we'll export everything for the prior month. And that's when we do, you know, most of the analysis and things like that. Apply our extra columns, you know, to the fields, do everything to present the way we want it to. And most of that came from Will Toro's class at ASTI, kind of inspired our whole looker journey and getting the data out of Service Desk so that we can do what we want with it. And it looks like he might be silently observing all of us novices here on the call, but we've got an expert in our midst.
Right. How much of that is automated, and like how time consuming is it to take it out of your software and then get it set up in there so you can see it visually?
I mean, I would say, you know, we might spend an hour a month on it. So, I mean, some of the exports do take time to run, but you know, you set them when you leave and you copy them over in the morning. We copy them over from, you know, the Excel or CSV file to like a master Google sheet that we use for the majority of the documentation. So it takes a long time to set up, but maintenance isn't bad.
Right. Okay. Yeah, I like that. Let me see here. What else do we have? So one of the other things about using that P&L, right? If you understand it, helps you to create your job rates. Or that's a question that comes up a lot for people on pricing, especially, you know, maybe a more beginner level. Like, how do you determine what to charge for a flat rate system? And knowing that P&L and understanding it allows you to run that cost of doing business calculation and then take that and plug it into you know, a flat rate system. That also helps to set the trip charge. One of the other things we do for analysis is sometimes we'll look at the markets that we serve, right? So Manny had mentioned zip code. So we'll also determining whether or not we want to continue in a market. Are we actually making money there? Also, what's the income distribution in that particular area? Because we're looking at that too. So if we're targeting, say, high-end service, do we want to go into you know, a zip code or a group of zip codes that have a relatively low income, median income, right? Because are you going to even get any jobs there? Are you going to sell any jobs there? So those are some of the other things that we look at as far as analysis go. And that'll help you figure out sort of supply and demand of that kind of thing. So let's see who else here is on here. I'm going to call on Dan Eccles because his camera just popped up in front of me. Dan, do you have anything to add to this conversation? What kind of metrics do you track? You look at your financial statements, or if you have any questions for anybody in here? You're muted, Dan. Dan, you're muted.
It's probably a good thing I was muted there.
There we go.
So,
okay.
No, I guess my question is, we were kind of discussing this earlier, in an earlier meeting, how people are kind of using their rates, and how are you using your rates for specifically if you're doing time and materials, okay, and if you're doing repeat visits, does that affect your rate too? So are you going to charge the same amount that you're charging on your first visit as your second visit? So I guess I would kind of challenge people on kind of how are they doing that, and what's working and what's not working in your marketplace. So I mean, we have our own ideas. Of course, we're big proponents on Blue Book, but there's also other ways of doing things. So and no one way is always going to be right. So I guess if people have other ideas, David, I know you don't. You kind of have your own rates, and maybe you'd want to kind of explore more on that. with Service Titan?
Yeah, sure. So we, I mean, I could answer for our company is, you know, we've done the cost of doing business calculator. It gives us our completed call rate. And then we're looking at, on average, how many, you know, what percentage of jobs are we completing in a day? And there's that, you know, efficiency factor calculation on that calculator. And that's going to give you your rate. And that takes into account, you know, repeat visits and things like that, because you're going to say if we book 8 jobs a day, but we complete 4 jobs a day, we have a 50% efficiency rate. I'm just making those numbers up, right? But that's how you're going to calculate that rate. And that's going to account for things like that, repeat visits and first call completes or whatever. And that's how you're going to figure that in. So I don't know that I would do it on like a case by case basis. That's just sort of company wide. That's how we set the rates. Maybe somebody else has input on how they figure that. I'm not sure how many people are doing time and materials. Most people have kind of moved away from that, but not necessarily. So, okay, let's see here. Have you done that calculator that's on the ASCII website, on the UASA website, cost of doing business calculator?
Yeah, I have not personally done that on that calculator, but mainly because I don't have access to it. But I have used Paul McDonald's calculator. That's open access to that one. So I highly encourage you guys to look at his stuff as well. It's just another calculator. He's a good resource for other service.
Hello, Jeremy. My name's Steve.
So
yeah. It
Good,
probably
thank you.
gives you a similar number, I would imagine.
yeah.
But yeah, no,
Steve, did you have
I
something
am
to
not.
add there?
I'm following up on an SR number.
I think somebody.
Yeah, I can get a link to that Paul McDonald's calculator there for you. I think someone's asking that on the chat. Anthony is.
Yeah. Okay. And so, what did you do then to take that number, and how did you coordinate that into a rate for things like return trips?
Oh, you're asking me specifically, or
well, yeah, because I mean, you had that question. I'm just curious if you've gone through that, knowing your rates from that calculator, how you've accommodated that kind of stuff.
Yeah, I mean, I'm not going to get really into specifics on that question, but I mean, just kind of applying that calculator and then running your own numbers and just kind of seeing how to making sure that you're making the margins that you need to make is probably
right.
where I'd go with that. So.
Okay. So has anybody else recently decided to cut out any products, and if so, how have you made that decision? You don't necessarily need to know which products you've cut out or what brands or anything like that, or even warranty work versus COD. How are you looking at the profitability of that type of stuff from a more granular level to know what's profitable and what's not?
Sure, I'll jump in.
Yeah. Okay.
A little while ago, when we're really analyzing, like, how do we scale back the amount of warranty we're doing, we realized, part of that was going to be cutting specific brands, TPAs, things like that, because we just couldn't hold the line and keep everybody happy. So we just put together a little vibe check spreadsheet, and we looked at our rates for each of them. We looked at our first time fix rates, what that worked out to our effective pay rate per visit. So you might have a very high rate on a brand that, has a 30-day turnaround time. You're always waiting on parts from overseas, things like that. And we also weighed in, like, how easy are they to work with? When we do have a problem, do we have a contact there to solve it? And so part of it was subjective and part of it was objective. And then everybody below a certain threshold, we just stopped doing.
Oh, okay. That's an interesting way to look at it. I kind of like that. That's so it's not just based specifically on the numbers, but some other things that are. So you cut out whole. Did you? I'm not asking for details, but OEMs or just third parties or both, or
Both, yeah. So okay. we looked at what's the contracted labor rate, what's the difficulty of working with them, either in terms of the product or the company? What's their first call complete rate look like? So what's the effective rate per visit? How much volume are we getting?
Okay.
Yeah, if we're getting 5 calls a year, it's not worth the admin to even have somebody know how to file the claims. What's the repair turnaround time?
Okay.
And then, that subjective rating for the vibe, and any of them that scored low, especially in that rate per visit category. We had some that had exceptional, labor rates we felt when we negotiated them, but because of parts availability issues, the rate per visit was very poor, So we just,
I like that.
we cut like 10 companies all at once, give or take.
Oh, wow. And how have you seen a positive effect from that overall?
Yeah. I mean, it reduced our warranty volumes. A couple of them that we tried to cut, we renegotiated with, and the ones that we didn't, we've never been happier that we're not working with them anymore.
Okay. I'm interested in your pay rate per visit. I just want to get a little more information about that. So you're looking at your negotiated rate, and then how many trips on average it's taking you to complete that job, and then just that's your pay rate per visit, right? That's a pretty simple calculation, actually.
Right. So in terms of there's like a couple commercial brands that we worked with. Like, well, we have good rates negotiated because they're commercial, but we'd find, all right, parts are difficult. Our techs have to reach out, or we have to reach out to get parts sent, no charge. They just don't have easy ordering. We can virtually never show up with the parts in hand because you can't get the parts with some of the companies until you have a diagnosis. And so,
Okay.
without any specifics on the brand, we had one brand with like a 170 labor rate. We realized our rate per visit was about $34.
Oh, wow. Okay.
So, I mean, that was a no-brainer. And there were a lot more that were in grayer areas, but yeah, no, I mean, it's powerful data.
Yeah. So and the thing that's nice about the subjective part of that, though, is you might also look at and say, well, there's a, let's say you had a high volume and maybe a lower rate per visit, but there might be some value in the high volume or the other sort of intangible things like just relationships and stuff like that. So I think I might do something like that. That's a great idea, Todd. Thank you.
Todd, that's pretty much how we did it during the pandemic. Exactly what you're saying. How many trips, parts. But the other thing that we looked at was customer satisfaction. How many complaints do you get for the brand? And if you're getting a high amount of complaints, not because of you, but because of working for that manufacturer, that made a difference for us as well. And it
repair turnaround time factored in that for sure, because you'd look at one brand and you have an average turnaround time of 6 days, and you'd look at some of these boutique brands that have literally a 20-day repair turnaround, or a TPA that's really slow to give authorizations, things like that. Like, I mean, I would not be satisfied to be that customer.
No, but that played a factor in us too. Was the how can you even satisfy them?
That's interesting about the boutique brands, because we deal with quite a few of those here in our area, and the parts is always an issue, and the turn time on those is always an issue. Just a note on that, it's unrelated to this topic, but I like to make sure we set the expectation for those brands right from the get-go to let the customer know, like, hey, look, this product is hand built in Europe, so you're not going to get parts down the street at the local vendor. It's going to take a while. We have to set that expectation. Most people with those types of brands seem to understand that, but you definitely do have a little bit more of a tense situation sometimes when you're getting into 3 and 4 and 5 and 8 weeks to get parts, for sure. But that's a great idea. I really like that vibe check sort of spreadsheet. All right, let's see what else we got here. So first call complete rate, we did a whole laundry room on a while back, which was pretty cool. If you guys haven't seen that, if you're a member, you can go back and view that. I believe that's accurate. There should be a link. Maybe Sarah can put that up for us. Conversion rate or walk rate, right? That's a pretty important metric although there's a lot of variables to that. So our techs all vary quite a bit in there. Some of them are selling a lot of jobs and some of them are not. And I kind of struggle with figuring out why sometimes. And it's hard to get a handle on why some techs can sell a lot and some can't. I know on average, we're probably around between 60 and 65% a conversion rate, right? 65% of our jobs are sold. Our software is pretty good in that we're able to make that pretty granular to exclude warranty jobs from being calculated into that, or jobs that just can't be converted per se. I would imagine most people are tracking that. I'm curious to know what kind of numbers, if anybody's willing to share, that you see as far as conversion rate or walk rate, which are the same number in opposite terms.
Yeah, we're around about a 72% conversion rate right now.
Okay.
But we're 100% COD. So
is that company, that's obviously an average of all the techs?
yeah, of all the techs, and we keep a pretty good inventory on our vehicles also. We carry about probably around $4,200 to $4,800 in the fast moving parts on our vehicles. And we basically demographically stock each vehicle based on the demographic area where the technicians are at. So because there's certain areas that, like there's certain places that are, there's one big appliance store in our area that sells a lot of GE and Hot Point. So the technician in that area stocks a lot more GE and Hot Point products. There's a Lowe's out in an outlining area that sells a lot of Frigidaire and Electrolux products. So we base each truck inventory based on the demographic area that the technician's in, so we know what they're selling in that area. And we do an updated inventory every 90 days to see what they're selling and what they're not selling, and update their truck inventory.
Do you have a big discrepancy between the techs, or some of them, significantly lower or higher in their?
On average, we're anywhere from about right around the average is 72% across the board. Some guys are as low as 65%. Some guys are as high as 82%. But the average
pretty close though.
It's pretty close overall. As long as we find that as long as we keep up with the inventory on the fast movers, of course, we can't stock everything on the vehicles, but we keep up with the fast movers on the vehicles. We have a very high conversion rate, and we try to pre-diagnose some of the we do our own warranties. So we have our own protection plan, and so we pre-screen all of those calls ahead of time with the consumer. We do a video call with the customer and pre-screen the call ahead of time. So on our warranty work, with our ACE protection plan, we're about an 86 to 88% conversion rate on first call complete. But that's all
that's great.
Yeah, the only thing we pre-screen is our own warranty customers.
Well, and that makes sense, especially on something like that. You want to get that done as efficiently as possible, for sure. Do you find that that's the deciding factor a lot of times, is the parts on hand, just having it, and we can do it right now, and that's
absolutely
what makes the difference?
For the consumer, two things that they want. No, there's three things. How fast can you get there? What's your price? And how quickly can you get it done? Everybody's in a fast-paced world today, and they want it done as quickly as possible. And if it takes 2 or 3 days to get a part in, they want to just replace their unit in most cases, that we find. So we try to do same-day deliveries if they want to condemn their appliance. So we sell product also. So we try to do a same.
Oh, wow. Okay.
So if we condemn it, we sell them, and we give the technician a small commission to sell the product in the home, since they have their tablets right in the house. So it really helps.
That's great. So it sounds like you got a pretty good handle on your numbers there. What other kind of numbers are you looking at, on a regular basis?
What do you mean?
What's important to you?
What kind of?
Well, what kind of metrics are important to you? What are you tracking as far as technicians go? Something that you look at, like a quick glance there. This guy's doing all right.
First call completes. First call completes are number one for us. And basically, how many condemns a specific technician has. If they're condemning a lot of products, then we look back and we take a look at the products that they're condemning to see if that specific technician needs additional training in a specific area. But we don't do any high-end products. We've eliminated any of the boutique products. We've just went to the basic products, and we feel that by having the technicians trained on the common products, the GE, Whirlpool, Maytag, Speed Queen, all of the fast movers that are out there in the industry, we find our technicians have a lot less problems, and we're not doing the Vikings, the Fisher Paykel, the Bosches, a lot of the upper line models, because we don't get a lot of them in our area, and we find that that's where the guys struggle and they get frustrated.
Right.
We can do a lot more calls if we don't have a lot of those high-end products that we don't get many of anyway. And when the technician does see it, they struggle on it. And a lot of times I have to go out, or a service manager has to go out and help them on that type of stuff. So we've eliminated all of that and just streamlined and stocked for the products that we know that we can get parts for quickly.
Yeah, that's smart. I found the same thing. Some of the stuff you just don't see a lot of is really where they struggle, and maybe it does make sense to cut those out, because it's just a time sink, and everybody gets frustrated, and it just doesn't work well for anybody.
From the consumer to the office to the technician to the
right,
all the way down. It goes all the way down the line. So you have to really streamline and figure out where your best profit centers are, and stick with that, and it really keeps the technicians a lot happier also.
Are you considering a first call? Are you considering a job a first call complete if a technician is condemning a machine, or?
No, we do not consider that a first call complete.
Okay.
That's just a service call only. We don't consider that we only repair.
So you're not considering, okay. So a service call only is not considered a first call complete.
No, not in our analytics right now.
When you're analyzing that, then how do you break it down? Do you just remove those service calls only from the numbers altogether, and then just look at the other ones? Okay.
Yep. We just remove the service call onlys, because a lot of times, if we condemn an appliance, not everybody buys from us. I mean, there's,
Right.
we get we're right now about a 26% conversion rate on a condemned to somebody purchasing from us, because, they have different appliances. Some people have Samsung in their house. We don't sell Samsung. They have LG. They want to keep the same type of appliance in their house.
Sure.
We sell Speed Queen, GE, Whirlpool. That's it. Just 3 products.
Okay. Yeah, no, that seems like a pretty good system. How many techs do you have? Just curious.
We have 14.
Oh, okay. So you service a large area then, I'd imagine.
Yeah, we have a large demographic area. Everybody's dispatched by zip codes. They have their own demographic zip code area, primary, secondary, and third tech in every area. So we cover a large area, a fairly large area, around 800,000 household consumers in our area.
Okay. When you're looking at that parts usage per area or zone, or how are you must be looking back in the past to say, in this area we're gonna use this much of this part, or how are you determining what to put on those trucks for each area? Is it solely based on what sells the most in that area, or are you looking at previous usage?
Specifically what's sold on each truck. So if a guy's in zip code 43616 and he's selling a specific amount of products on his truck, then we basically, if he sells more than 3 of a specific part on his truck over a 8-month period, we add that part onto his truck. If he doesn't sell the part in 13 months, then we remove the part from his truck. So
okay.
It's all.
So you're spending a pretty good amount of time, on just keeping up with that inventory.
Every 90 days. It doesn't take long. Every 90 days, we go through the trucks and we just go through their inventory and just update their inventory every 90 days. And if we see a fast mover that's happening that just came into the market and we see that the guys are using it, we just add it onto their truck. In the next inventory, we remove anything off their trucks that are dead stock. That 13 months. If we don't sell it in 13 months, then we put it in our warehouse. And then all the technicians have access to the part. Then if they need it, they can come back and grab it from the warehouse.
Nice. Okay.
It keeps the inventory flowing pretty good.
Very good. All right. So we got 30 more people on here. We've had about 4 people add in some of their ideas. What other numbers that we haven't discussed is everybody looking at or would like to know about? Maybe somebody else can answer that. Let's see who has their camera on that hasn't been called on yet. Adam Gillo, I'm looking at you. You got your camera on, so
yeah, I don't really have.
Maybe you have something to add.
I don't have too much more to add to that, really. My process is a lot like Matt's, really. So one of my main things that I track and what I've been working on ever since last ASTI really was my first call complete ratio. And I was really listening to see how to break up a service call away from it. You know, sometimes a technician will walk in, it'll be an easy fix, and we'll just collect the diagnostic on it, which right now in my system still calculating a first call complete. And I haven't figured out. I use CDA software, and so I've been working really hard with Bonnie there to actually build everything into my executive dashboard in my software, so I'm not keeping up with Looker and everything else. It's just I don't have to upload anything. So my stuff is bare minimum right now. My recall rate is something that I stay on top of, and go back through and review every single one of my technicians' recalls. As far as warranty work and stuff like that, like we're right now total revenue with the same amount of technicians. I've got an extra technician. I'm not quite the scale. I run 6 techs, but total revenue, we are currently at now what our total year to date was last year. And a lot of that changed with van inventory, really working on the first call completes, and I dropped out all of our warranty stuff. I do OEM warranty for Insinkerator, and other than that, I killed everything else. Just after doing cost of doing business, our technicians are on a kind of a progressive pay scale from a 22 to 26%, depending on how much revenue they were on per week. So, you know, somebody that's extended warranty company that's paying you cost plus 25% on a part. Well, I just lost money on that part if my technician ran 26%. On top of my cost of business is, you know, cost of doing business is so high, it eats up the whole labor charge. So if there's a second trip, but doing all that is, I mean, tremendously increased our revenue for this year. So, but yeah, as far as I'm still learning as far as everything else goes. I'm definitely not as deep as Todd or you or somebody else on all this KPI, or even Will's part of my peer group. I'm not very computer savvy. So I try to sit here and go through it and learn it all, but I've kind of relied on CDA to kind of start setting this stuff up for me, and that's pretty nice. So
yeah. Well, I don't know if anybody can compare to Will's level of data.
That's
pretty impressive. Yeah. What do you consider a good callback percentage anyway? I'm just curious because everybody has a different metric.
So my deal, I like to be at 4.5%, and for the month of October, I'm looking at it, we're at 5.12% right now. Okay. So that's kind of where I measure my company with 6 techs. So yeah, my inventory system is kind of what like Matt's doing. I can see all of our fastest moving parts. A funny thing too with that is, you know, I've got about, on our non-sealed system techs vans, I've got about 130 parts total, but I'm up to about 90 different part numbers. And so I start drawing straws at some of what I'm putting on the vans. And it seems like the more I keep putting on the vans, like if I look back over the last 6 months and see have we sold it company-wide 4 times, it seems the more parts I keep putting on the vans, the more the sales come up from those parts, just having it right there. Huh. So, you know, a customer waiting to get a part and come back for a second trip, if they're already on the fence of buying a new appliance, seems to convert it. Our first call complete ratio right now for this month is 79%, which is, you know,
oh wow, that's phenomenal. Awesome. That's great.
So, yeah, and I've seen it grow ever since March when I started. It's like keeps going up percentages every month ever since I really started going after this first call complete ratio deal. So,
Adam, question for you.
Yes, sir.
When we do our inventory with the guys, we take every part off their truck. I make each technician touch every part when they put it back on their truck, and we found that by doing that, it makes the tech, when we were stocking a lot of parts on the truck, the technicians couldn't even find the parts. So
Yes.
I'm touching the parts, reorganizing the parts on their van makes a huge difference on them saying, oh, I remember seeing that part. I know I have that part on my truck.
So the beauty of our software is as soon as our technician types it into CDA, it
Right.
says, hey, you've got one of these on your van. And
Right.
So we go back through and do a full inventory check, and then we'll do a spot check like every month. So
Yeah, and the thing is, we found that when we were doing the inventories for the guys, and they weren't touching the parts, a lot of the guys would say, hey, even though it showed that it was on their truck, we say, hey, you have this on your truck. We know you do. It's in the system.
yep.
Well, I can't find it. I just can't find it. Well, now by making them touch every part, it makes a huge difference. We found that it makes a big difference when they're touching the part 4 times a year.
Yep.
And
for sure.
and then we know when we take them off their truck, we make them put that back on the truck and reorganize their truck as we dump the inventory off their trucks.
Yep.
So it makes a big difference. Do you have your technicians put the parts away?
They
Okay.
do. I've got 2 of them that are super, super sloppy. I don't know how they find anything.
Yeah.
So I just set up, I just got a new technician on the road, and I went and set up the whole van this time. And so I was like, hey, I mean, everything's labeled, you've got a general area for your washer parts, this are fast moving right when you open the sliding door. And so I've got them set up really nice now. So I need to copy it on all the rest of our vans, but
yeah,
they're doing pretty good, and they're accountable for all of it because there's a barcode and a tracking label on every single part that comes in and out. So
Smart.
if it's gone, they lost it somewhere. So
Right.
We started doing that about making this. I've been making the new tax so when they come in, I take everything off the truck and restock it in the way they said for the same reasons. They're like, wow, I didn't know that was on the truck. Man,
Yep.
it's on your list because they all have a list of what's on the
Right.
truck, but obviously they never
They don't
look at it.
They don't look at it.
No, no. They don't. So yeah, making them stock it themselves is a good idea. I really like the idea of having them do the inventory and then restock it every 90 days or whenever you do it. That's a good idea. So keep it fresh in their mind. So Todd said here in the chat that they're only stocking about $1,000 on each truck, but triaging as many of the calls as possible, which keeps their vehicles smaller. And I guess I don't know, Todd, if you can chime in. Are you returning the parts you don't use? That's what we do. We try to triage as much as possible. We don't stock a lot. I'd say we have maybe $3,000 worth. But yeah, I like the triage idea. That requires a whole separate thing though.
It's true. So we triage every job, unless it's a same day edition because we had a slot open or something like that. And it's very effective. We are able to get most of our parts next day, through our regional distributors like Marcone, Sunberg. The further out we get booked, the higher our FCCs are. So like our Des Moines division is booked out over a week solid, and they're averaging like 93% FCC, which we do include, no fixed service calls in that because they're done. But in general, with $1,000 truck stock plan plus triage, we average around 83% first call completion company wide.
Todd, how many technicians are you running?
25.
And you triage every call?
Yeah. Not personally anymore, but yeah, we triage every call.
Wow, that's huge. You must have a couple service representatives doing that full time.
We have, pretty much our service manager does it full time, and we'll chime in when we need to, like especially on Mondays when we have a higher call volume. But I will say, using the SCS, whatever they call it, diagnostics or pre-ID, has been very helpful because I used to triage all these myself just by going to Marcone and pulling up a parts diagram and thinking real hard.
Right.
And we can have a single person, on a good day on a Monday triage over 200 calls effectively.
Using the program?
Very cool.
Yeah, do you physically talk to the customer? Or do you just go based on the symptom?
We usually go based on the symptom. If we don't have enough data we'll send out an SMS just asking for more information on the complaint. If it's far out or if we really feel like we're missing something important, we will pick up the phone and call them, or we'll invite them to do a remote visit, where we connect over, like Zoom.
Okay.
We've also toyed around with outbound AI calling to help enhance the complaints we get from the warranty companies, but that's still kind of a beta thing.
Okay.
Very cool. All right, guys. Well, we're just at 1 hour, which is bringing us to a close. Appreciate everybody hopping in and adding on your perspective, and at least I got some good notes out of it, so got some things to think over, maybe make some changes. Always something useful out of these conversations. Little bits of things that just, constantly improving things. All right. So, Sarah, are you gonna?
I just want to thank everyone for their participation today and their contributions. And we look forward to seeing you guys on the next laundry room. And if you're not registered for ASTI, like David said, register now.
Thank you.
Thank you. Have a great day.
Thanks. Bye.